In 2025, privacy coins got hit hard by regulators. Monero alone got delisted from 73 exchanges, while countries like India ordered exchanges to delist privacy coins entirely. But somehow, they were also one of the best performing sectors in crypto that year. Zcash rallied over 800%. Monero tripled despite getting kicked off most major platforms. So, is the market just chasing whatever is hot, or something deeper going on? Something about what kind of financial system people actually want? A lot of it traces back to a single tweet. On October 1st, 2025, Naval Tweet, founder of AngelList, one of the most followed voices in Silicon Valley, tweeted, "Bitcoin is insurance against fiat. Zcash is insurance against Bitcoin." Zcash jumped 27% within hours, and by mid-November, it was touching $740. Now, Naval isn't exactly a neutral observer here. He invested $715,000 in the company that developed Zcash back in 2015, so he has a direct financial stake in this, and critics pointed that out immediately. And if you want to be technical about it, the insurance framing doesn't really hold up. Insurance hedges against something by moving in the opposite direction, and Zcash just moves with Bitcoin. But none of that stopped the rally, which raises the question of why it resonated so strongly in the first place. One possibility is timing. By October 2025, the surveillance infrastructure around crypto was building fast. The EU's DAC 8 directive was set to go live in January this year, which would force exchanges to automatically report your holdings to tax authorities. CBDCs were in active pilots across China, India, and Europe, all built with full transaction traceability. The Financial Action Task Force had pushed 85 countries to pass travel rule legislation requiring exchanges to collect and share customer info on every transaction. And when you look at what people were actually doing with Zcash, by late 2025, about 30% of the supply had moved into shielded addresses, the ones that encrypt everything. And that was only around 5% 2 years earlier. So maybe Naval's tweet didn't create the demand, it just put words to what was already happening. What's also interesting is that all those delistings and bans that we mentioned didn't hit every privacy coin equally. In places like India and South Korea, privacy coins got banned across the board, but where regulators leave room for discretion, Zcash tends to survive while Monero gets dropped. ZEC is still trading on major platforms, and the difference comes down to how they're built. Monero uses mandatory privacy, meaning every single transaction is encrypted, no exceptions. Zcash gives you a choice. You can use transparent addresses that work like Bitcoin, fully visible on the blockchain, or you can use shielded addresses that encrypt everything. And privacy advocates have a problem with this. They argue that if only some people use the private option, those people stand out. But to regulators and exchanges, that difference matters, and so Zcash gets more room to operate. Now, the irony is that while regulators are cutting privacy coins off from traditional finance, they're also building the strongest argument for why people might want them. 137 countries are now exploring or developing central bank digital currencies. China's digital yuan is live across 30 plus cities. India's e-rupee hit over 10 billion rupees in circulation by March 2025. Europe is targeting a digital euro decision by 2026, and the pattern is consistent across all of them. Money that can be tracked and controlled in ways physical cash never could. For example, China's CBDC has programmable features such as spending restrictions and expiration dates. In one Shenzhen trial, they programmed vouchers to expire and 90% got spent before the deadline. Now combine that with the automatic reporting that we mentioned earlier, exchanges reporting your holdings to tax authorities, and the surveillance isn't theoretical anymore. People can actually see what the future of money looks like. Fully traceable, reportable, and programmable. And for some, that's exactly what they want. Better fraud prevention, cleaner tax enforcement, more efficient policy. And for others, it is a reason to look for alternatives. And when they do, privacy coins are what's there. And it's not just retail users looking for these alternatives. The same privacy problems show up at the institutional level as well, just for very different reasons. If you're a hedge fund executing a large trade on a public blockchain, everyone can see your position. Other traders can front run you before you finish executing. If you're a corporation using blockchain for supply chain or cross-border payments, your competitors can see your transaction volumes, suppliers, and cash flow patterns. Protocols like Railgun and Secret Network let you transact on public blockchains while keeping the details private, using zero-knowledge proofs to verify a transaction is valid without revealing what it is. Now, they aren't mainstream or widely adopted yet, but even Vitalik Buterin has used Railgun in June last year to move over $2.6 million. Now, the question is whether privacy coins can actually survive real threats. So we talked about the delistings and bans, but what if this goes fully global? By 2025, 97 countries had updated their privacy coin regulations, and that is up from 79 just 2 years earlier. But it's still a patchwork. The real threat is a global consensus that privacy coins can't coexist with financial oversight. Now, is that likely? Probably not. Getting every major economy to agree on anything is hard. Countries have different priorities, political systems, and relationships with crypto. But if it happens, the infrastructure will probably collapse with no easy way to convert the privacy coins to dollars. Peer-to-peer platforms saw a 19% jump in activity after the delistings last year. And that's where people would most likely go. But P2P can't replace the level of scale and ease offered by centralized exchanges. So even if privacy coins wouldn't die in such a scenario, they would just get pushed so far to the margins that for most people, they would just be impossible to access. Now, the second threat is quantum computing, and the timeline just got a lot shorter. In November last year, Vitalik Buterin warned that quantum computers could break the cryptography securing Bitcoin, Ethereum, and privacy coins as early as 2028. He cited prediction markets that put the probability at 20% by 2030. For privacy coins, the risk is double. A quantum computer could not only break encryption to steal funds, it could also decrypt years of past transactions, completely undermining the privacy that these coins were built to protect. Zcash says it has actually been preparing for this for years. Sean Bowe, Zcash's lead engineer, explained that while the project is not quantum resistant yet, most of the protocol work for quantum resistance is already done.
That other channel can be resistant against quantum adversaries because it could deploy quantum resistant cryptography.
Now, Monero is researching quantum resistance as well, but they are in earlier stages. With privacy coins already gearing up, it's now a question of whether they can upgrade before quantum computers eventually break current cryptography. So what is the verdict? Are privacy coins just hype? Are they something more durable? Well, 2025 really forced that question. Regulators pushed harder, and yet demand didn't disappear. And that, of course, doesn't prove privacy coins are the future. They're still volatile, vulnerable, and dependent on how far regulation and technology go. But it does suggest that while part of this may have been driven by excitement or price, it was also possibly a reaction to the direction the financial system is moving. Now, whether that reaction grows, fades, or gets cut off entirely is still an open question. So, where do you think privacy coins will go this year?